In today's video, I'm going to be showing you a simple SMC pattern you can use to take advantage of the market. Alright, so we are using a V75 Index as an example. Okay, so without further ado, let's dive in. If you're yet to subscribe to our channel, ensure you do that and also like our videos to continue receiving updates from us. Okay, so looking at the chart before us, we have a volatility 75 index. Now we saw what price has been doing lately. Okay, now I'm looking at this area right here. We saw that there was a break of structure to the downside, so we have a break of structure here, a break of structure to the downside caused by this zone. This is 4-hour time frame. If we go to our 2 hours time frame, we are going to see that zone clearly. Okay, now this is the zone in the 2 hours time frame. So we have this break of structure to the downside. Okay, now having this break of structure to the downside, this becomes a valid supply zone. A valid supply zone. Why? Because it's broke structure. Okay, so we have our supply zone. A supply zone. Okay, let me use capital data. Have our supply zone. Okay, and then of course in our supply zone we also have our order block. All right, so this is a supply zone, and then in that supply zone, if we zoom in this 2 hours time frame, we see that this is the order block that caused this break of structure to the downside. Okay, so this is the order block that caused this break of structure to the downside. So having seen this become a valid supply zone. So now having seen this break of structure, in the future, this is what we expect. That after this break of structure, so we are expecting in the future for price to come in to tap into the zone and then continue selling. So that's actually what we are looking at for in the future. But currently, looking at what price has been doing, we see that after this break of structure, there has been a sort of consolidation. Okay, and then we are also expecting that price is going to get to the zone. Okay, we're expecting that price is going to get to this zone and then sell off, being that this is a valid supply zone. Okay, it's a strong supply zone because it's broke structure massively to the downside. Okay, all right, so now how do we take advantage of what we are seeing in the markets? So after this massive break of structure to the downside, we saw that when we got to this place, there was a break of structure to the upside. So there was a break of structure to the upside caused by this zone. Now let's go to our 4 hours time frame. I prefer using my 4 hours time frame to look at for a valid zone. So now we saw that there's a break of structure to the upside caused by this zone. Now this is the demand zone. So we saw there was an order block. This order block, this last candle that was formed before this impulsive move that broke structure. This is our demand zone. So there was a break of structure. So we expected price to tap into the zone and then continue buying. So after this break of structure, we saw that price came in and then it came in before it tapped into our zone. Let's go down to our 1 hour time frame. So now after spotting our zone in the 4 hours time frame, okay, what I usually do is that I will go down to our 1 hour time frame to check for to refine that zone further. Okay, you know why we refine our zone is so that we'll have a good risk to reward. Okay, so we'll reduce risks and then we'll maximize profit. That's why we usually refine our zone. So let's go to our 1 hour time frame. So coming down to our 1 hour time frame, so what do we see? We saw that coming down to our 1 time frame, refining this zone. Okay, we see, okay, coming down to our 1 hour, with that zone still remains the same. Okay, there's actually not much to nothing to refine there. Okay, so now price came in. When price came in, it formed this high, it formed this low rather, it formed this low, and then it did as if it wants to go up. Of course, some persons would have started buying from there, but what did we see? Since that this is the zone we're actually targeting, this zone. Okay, so price came in and then took out this low it created and then tapped into our zone. That means this place becomes a liquidity. So there was an inducement there. So some persons that started selling from there would have been taken out. Okay, so we have that's liquidity down there. So price came in, it took out this low and tapped into our zone. So after price tapped into our zone, the next thing we look at for is we look at for our confirmation entry. Okay, so now for our confirmation entry, we can find that in the 15-minute time frame, the 10-minute time frame, the 5-minute time frame. It could even be the 3-minute time frame or 1-minute time frame. Okay, so let's go down to a lower time frame. So now let's look at our 15-minute time frame if there's any entry opportunity there. So now coming down to our 15 minutes time frame, okay, it is not very clear. Let's go down to our 10 minutes time frame. So now coming down to our 10-minute time frame, so we see that after this liquidity was taken, after this low, this previous low was taken, so price came in, tap into our zone. So we wait for a break of structure. Okay, and of course this is our entry model where we have a break of structure, a retracement to the zone that caused the break of structure, and then so price to go. So this is our entry model. We'll have a break of structure, of course, break of structure. Okay, and then retracement into the zone that caused the break of structure, and then so that's what we're looking at for here. So I can take this out. Okay, so now coming back to our chart. So did we see that break of structure? Yep, we saw that. Let me shift this. Let me take this away. So now we saw that there's a break of structure. Okay, where is the break of structure? We have here, this is the break of structure. Break of structure to the upside. Okay, it is a break of structure because if you look at this whole zone, if you look at this whole area, okay, if you look at this whole area, we discover that price broke above this previous high, and then we saw a full-bodied candle close above that previous high. So this is that break. This is the break of structure. It was not just a weak break; a full-body candle closing above the previous high that was taken. Okay, let's take this out. All right, let's take this out. Okay, so we saw a break of structure, and this is the zone that caused the break of structure. Now this is that other block, so that caused this break of structure. So we waited for price to retrace into that zone, and then we bought. Okay, so this would have been a stop loss below this zone. Okay, and then of course where would have been our exit? So if we go down to our 1 hour time frame, coming down to our 1 hour time frame, this way, where would have been our exit? Would have targeted the previous swing high, which was here. Okay, for our TP1, and then for our TP2 would have gone a little bit further. Okay, we see have another swing high up here, so of course would have gotten here, and then it is another zone to have gotten out of the market. And some persons might target this. Now don't be too greedy. Okay, take advantage of what the market gives you. Don't wait for it to hit to hit your highest point. Remember, the point we're actually targeting is here, this zone actually. But we saw that when price gets into this zone, there was a kind of retracement. We saw what price was doing. As a wise trader, you would have gotten out of the market here. Don't wait for it to come to our zone. Okay, to our target point, our main point. All right, so that's how we would have gotten this entry. Now let's take this out. Let's see another advantage we would have taken. So go back to our 4 hours time frame. So coming back to our 4 hours time frame, so this is the previous trade we took this trade. Okay, fine. And then we saw that also there was a break of structure here. There was a break of structure. This is a 4 hours time frame. There was a break of structure to the upside caused by this zone right here. So there was a break of structure. This zone triggered the break of structure. So now if we come down to our 4 hours time frame, okay, this is the demand zone in the 4 hours. This is the last dark candle that was formed before this impulsive move that broke structure. Okay, so this is our demand zone. Okay, this is our zone. So we're looking at for price tapping into the zone before it goes up. All right, so now let's go down to our 1 hour time frame to refine this zone further. Okay, coming down to our 1 hour time frame, so we can refine this zone to this particular area. Okay, so this is the refinement. So we waited for price to come in to tap into the zone before it goes up. So now price came in, it did not tap into our zone yet. So this is a form of inducement as well. The same thing we saw here, price did it again. So we saw that inducement. We saw that inducement. Okay, we saw that inducement. So price did it took out this low and then tap into our zone finally. Okay, that's why we always wait for price to tap into our zone before we buy. So persons would have wanted to buy from here, and then you see what happened. Price came in, took out that low, tap into our zone. So the moment price tap into our zone, the next thing we are looking out for, let me take this out. Okay, the next thing we'll be looking out for here after price tap into our zone is our confirmation entry. So now we said our confirmation entry could be in our 15-minute time frame, it could be 10 minutes, it could be 5 minutes, or 3, or as the case may be. So let's go to our 15-minute time frame. Let's see if we have gotten any entry here. So coming down to our 15-minute time frame, so what did we see here? Okay, our 15-minute time frame. So it was not very clear here, though I'm seeing something. Let's just go down to our 10-minute time frame. So coming down to our 10-minute time frame, it was clear. Okay, I think we should stay with the 15 minutes. Okay, we should stay with the 15-minute time frame, because if we are looking at this 10-minute time frame, that means we would have said, okay, this is a break of structure to the upside, and then this is the zone that caused the break of structure. So we would have been waiting for price to come and tap into the zone before we buy, which price did not do that here. Okay, but if we go to a 15-minute time frame, we will see that. So coming down to a 15-minute time frame, so we saw that there was a break of structure to the upside. Okay, this is a break of structure. Why? Because this previous high was taken by this other high, which there was a full body candle close above this previous high. Now this is the zone that caused the break of structure. This is that zone. This is the last down candle, the last down candle that was formed before this momentum that broke structure. So this is our order block there, our point of interest. So we waited for price to go, retrace, tap into our zone, and then wait. So where would have been our exit points? So if you are entered from here, our exit point. Now we saw something. Remember, this is our target. This is actually our main target, this particular zone. So having seen what has happened, because we are targeting this zone, all these highs seen here, they will act as liquidity in the future, because if price does this, goes up, it will take out all these highs to come here. Okay, all right. Now, so this is where we entered, where would have been our exit point. So we saw that when price was coming down to this zone, we saw all these highs were created. So price was just going down, creating these highs. Okay, so we saw we're having something like this. Let's switch that to. So we're having something like this. You're just going down. Price was going down, highs and low, highs and low, highs and low, and so it was just going down. So now we saw this, and price has tapped into us. Where would have been an exit point? Now this place will act as liquidity. Okay, price is going to take out these highs in the future. So we saw this would have been our first take profit. Okay, would have gotten our first take profit here, and then the second probably this other high, which price did exactly. It gave us this. Okay, now also when price got here, it retraced. It did not get into our major target points. Okay, it didn't get to a major target point, rather it retraced from here. As a wise trader, you would have gotten your first exit. Maybe this would have been your first exit, and this is your second exit. Maybe this would have been your third exit. Okay, but price didn't get here. So the moment you start seeing this retracement somewhere in lower time frame, you would have known, God, this is the best time to exit the market. Okay, that is very, 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 very important. So let's take this out. So another thing we see, let's go back to, so we saw how we got this particular entry. So this is the first one. Okay, I'm looking for it to you. So this was the first entry. We saw how we got this particular. Let me take this out. Okay, this particular two. So we saw how we got this particular entry. Okay, how we got this particular entry. We have also seen how we got into this particular entry. Okay, so how we got the entry here, how we got this other entry. Now there's also another entry. Let's go back to our 4 hours time frame. So coming back to our 4 hours time frame. Okay, price having done this and have done this. So let's see if we can see anything. We can still see something here. Okay, what is it that we saw? We saw that there was a break of structure to the upside. This is a break of structure caused by this zone. Okay, in a 4 hours time frame, this is the zone in the 4 hours time frame. Let me take this out first. So this is the zone. We have that break of structure to the upside. We have this break of structure to the upside caused by this zone. Okay, remember we are still targeting here this high in the future. Okay, so now after this break of structure, the next thing we do, we refine our zone, go to our 1 hour time frame. So coming down to our 1 hour time frame, so we can refine this zone down. We can refine this further down to this. Okay, so waited for price to come in. So price came in, tapped into our zone. So after price tapped into us, we look at for our entry. Okay, so we'll go to our 15. This trade is already running. Okay, I can show us here. The trade is already running. Okay, it's a profit. That trade is already running. All right, so now how do we spot our entry? So let's go to our 15-minute time frame. Let's see if we have gotten an entry after price tap into us. So coming down to our 15-minute time frame, we would have gotten an entry. Look at it right here, very clean and clear. So we saw after price tap into us, so there was breakout structure to the upside. It's a breakout structure, or we can even use this one safe. We can even use this. Okay, it was breakout structure caused by this. So this candle right here caused that breakout structure. It caused the breakout structure. So we saw what happened here, and then so we saw that price came in. It broke structure. This previous high was broken, and it formed another high. Okay, then it went up. This is the zone that caused that breakout structure. So price came in, tap into that same zone, and then it continues buying. Okay, so now this is how we would have gotten the third entry. So we got this first entry, got this second entry, and this is this third entry. So where will be our exit points? Where are we targeting? Okay, where are we targeting? Now looking at this running trade, this is where we are targeting the previous swing high. Okay, that's where we are targeting. So we are targeting, let's go to our 1 hour time frame. Okay, so coming down to our 1 hour time frame, so we are targeting this previous swing high. Okay, we can target here as first TP. Okay, this could be our second TP, and then of course overall is still this guy, which we are not certain of when exactly that is going to happen. But if that does happen, it's going to take out all these highs. All these highs are going to act as liquidity, so it's going to go massively to this zone, and then this is as value supply zone, and then probably go down lower. So that's it, guys. So ensure you practice simply by understanding market structure, okay, chart pattern. If you can follow it very well, discover that trading is actually easy, not as difficult as you think it is. Okay, so if you're yet to subscribe, ensure you subscribe. If you're yet to like our videos and share. So till we meet again in our next video. Bye.